Welcome to a brief video on charitable contributions by corporations. Okay, so like the deduction for individuals, charitable contributions are also a deduction for a corporation. Now, if you think about it, there's no real compelling reason why there wouldn't be a deduction for a charitable contribution as long as the corporation deemed that it was ordinary and necessary for business. That's going to be fine. So what we need to deal with are the handful of special rules. So the first is, what is the amount of the deduction? So most capital gain property, so property in the hands of the corporation that is capital property, capital assets, would be deducted at its fair market value at the time of the deduction. So if in the rare event a corporation gives away stock, then that stock goes out at its market value. If, on the other hand, it's ordinary income property and the primary source of ordinary income property being donated by a corporation is inventory, then that donation is valued at the adjusted basis of the inventory, whatever that is. Okay, so obviously if it's cash, then it's just the amount of cash. An accrual method corporation does have one slight advantage, which is you can actually accrue a charitable contribution at year end if that contribution has been approved by the board of directors prior to year end and you pay it within 3.5 months after year end. So you're able to accrue back an expense you haven't paid for a charitable deduction as long as those two qualifications are in place. Okay, so the deduction is limited for a corporation to 10% of a modified taxable income. And that modified taxable income is calculated before deducting, of course, the charitable contribution. It's before deducting the dividends received deduction, which we're going to get to in another video or so. It is before deducting any NOL carrybacks and capital loss carrybacks. And it used to be before deducting the DPAD, but the DPAD is now gone, so not relevant. To the extent you limit your corporation limits its charitable contributions due to this income limitation, they can be carried forward for up to 5 years. So typically when you see a charitable contribution question, it's presented in a couple different ways, and I want to make sure you understand both of these ways. So one is, here's the taxable income of the corporation that either includes or excludes the charitable deductions, the DRD, the carrybacks, etc. I refer to that as a top-down approach. And then there's here's sales, operating expenses, charitable deductions, the DRD, etc. That's called the bottoms-up approach. So in either version, the key is computing modified taxable income. So in 2018, Slughorn Corp donated a total of $700,000 of cash to the American Red Cross, so it's a qualifying charitable contribution. Slughorn's taxable income before the charitable contribution deduction, the NOL carryover, and the DRD was $6,287,000. What is Slughorn's charitable contribution deduction for 2018? And if there is a carryover, what is it? So the way we need to fix this is we need to reconcile that taxable income before to modified taxable income. So we have our chart of our little helpers available, and we can simply start with taxable income before the charitable contribution. Well, if it's taxable income before that, then we don't need to add it back. If it's taxable income before the NOL carryover, well, recall we do need to deduct that, because we are eligible to deduct a carryover, not a carryback, when we're calculating modified taxable income. The DRD is not in there, so we don't put it in there. That gives us modified taxable income of $6,263,000 multiplied by 10%. Tells us that the donation deduction is limited to $626,300, and whatever the spillover is, that would be carried forward to next year. Okay, let's put that example on its head and do version 2. So in 2018, Slughorn's trial balance listed the following. So we have gross income of $10 million, deductible business expenses, including the charitable donation of $700,000, equals $4,413,000. Slughorn has an NOL carryover from 2017 and a DRD of $21,000 that is not included in the above amounts. So let's calculate the charitable contribution deduction using this method. So in this case, think of it as we're trying to calculate taxable income, but we can calculate direct taxable income, modified taxable income directly. So gross income 10 million, the deductions of 4.4 million. So that's taxable income before the charitable contribution. So we need to add that back. Recall that that was included in the 4,413,000. We need to deduct the NOL carryover. We do not deduct the DRD because that is excluded from modified taxable income. Therefore, we get the same modified taxable income in the same 10% amount. So that's the end of video 16B. Thanks for watching.